It's obvious that the global virus crisis is hurting the world economy. From small bars to big manufacturers, businesses of all sizes are suffering. Now economists are trying to put numbers on the damage. On Tuesday, the International Monetary Fund gave its verdict. It says the crisis will see global GDP shrink 3% this year. That is several times worse than the 0.7% seen in 2009 during the global financial crisis, and would be the worst contraction since the Great Depression of the 1930s. The fund calls this episode the Great Lockdown instead. Chief economist Geeta Gopinath.
It is a recession that involves solvency issues. It is a recession that involves unemployment rates going up dramatically. And these tend to leave scars. And while there are many very strong policy actions being taken, some of this will spill over into the second half of this year and into 2021.
The fund says the world will lose about $9 trillion in output over 2 years. That's more than the combined GDP of Japan and Germany. And that's its best case scenario. If the pandemic lasts longer than expected, or if there's a fresh outbreak, the numbers could be much worse. For now, Gopinath predicts a partial rebound next year, with growth hitting 5.8%, though that would still leave the world economy smaller than it would have been. And she warns that even that forecast is marked by extreme uncertainty.